Morgan, absolutely. FedEx shares moving lower. They beat on revenue, but they missed on EPS. The estimate was for $4.54 a share. It came in at about $4.51. Just looking through the numbers right now, CEO Raju Ramanian really highlighted what he called a challenging operating environment, including a compressed peak season and some severe weather events. Looking through the numbers right now, we're seeing some pressure on the freight division. The company saying that freight actually saw a slowdown, fewer shipments, also fewer weight on shipments. However, they said some of their cost-cutting efforts actually helped the express division that really drives the majority of revenue. So again, beat on the top line, a miss on the bottom line. The company also lowered its full-year EPS guidance. Previously, the guidance was $19 to $20 a share. It was actually lowered the quarter before. They've lowered it even more now. The full-year revenue guidance is $18 to $18.60 a share. Important to note, there's only one quarter left, but reducing their guidance for that last quarter. Back over to you.
All right. Frank Collins, thank you. Adam, I want to get your reaction to this because shares of FedEx are down about 3.5%, 4% right now. Coming into this print, a lot of folks expected that FedEx could lower its guidance, but how much do we read through to the macro here, given the fact that some of the, maybe not the hard data, but some of the soft data, particularly here in the U.S., has been deteriorating?
Yeah, no, obviously FedEx is a very macro company. They have their finger on the pulse of the economy, not just in the U.S., but globally. And so the fact that, they're taking down guidance, I think just speaks to the very uncertain environment that we're in right now. We heard something similar from Accenture this morning. Just in the last several weeks, all of the policy changes and market volatility has caused consumers and companies to hesitate in their activity. Now, if this continues for an extended period, it's going to start to bleed into the hard data. But I think for now, there's just a ton of uncertainty and out of an abundance of caution, you're seeing companies react and provide more prudent outlook on kind of what they're going to be able to put up financially.